Professor Don Bush, and I've been an accountant and a professor for about 30 years, and I've been a CPA for about that long also. And I've got fantastic ways to explain accounting. So if you want to learn accounting, you're in the right place. Today's lesson will help intermediate accounting students, finance students, and principles of accounting 2 students. We're talking about free cash flow. It's one of my favorite metrics for analyzing financial statements. And what it's about here is, I call it fun money. And what it is how much money does a business have to do really cool, fun things with? Well, we can calculate that. Here's how you do it. So we go here to cash provided by operating activities. It looks like Fred here has a negative $14,000. That is not good at all. That means that Fred is not making money from selling snowblowers or fixing snowblowers. He's not bringing in a positive cash flow from operations. So net income here, his net income's negative also. And you would expect a correlation between net income and operating activities. And there seems to be, they're both negative. Net income is calculated on the accrual basis. We're trying to match expenses with revenues and recognize revenues in the period that they earned. And it looks like that is negative also. So Fred is not doing so well. Now, it looks like here in cash provided by investing activities that Fred purchased some equipment, so he's got a negative $3,000 there. And that usually is a good sign. It's good to see businesses reinvest in themselves to try to keep up with technology and the competition. And it looks like Fred sold $100,000 worth of land for a net investing activity of $97,000. So at this point here, it looks like Fred is financing his business through the sale of land. That's probably not a very sustainable plan of attack for Fred. Cash provided by financing activities, decrease in notes payable. Fred's paying down some debt. That's probably a good thing. Paid dividends of 10 grand. So his financing activities is a negative 15,000. Fred is not doing so well. This bottom line number, the net change in cash, 68,000. Well, he's got 68,000 more dollars than he had at the beginning of the period, but it's more important to know where it came from, and it came from that sale of land primarily. And overall, Fred is not doing too well. So we want to know what his free cash flow is. So his free cash flow is simply this. You take the cash flow from operations, which in Fred's case is a negative 14,000, and you include here the purchase of equipment for 3,000. So Fred's in the hole here by 17,000. So Fred has a negative cash flow of 17,000. So let's go down here and just see how it's figured out. So here we go. I'll split the screen so we can see this a little easier. There we are. Here we go. All right. So free cash flow, cash generating operations. Well, that's not so with Fred. A negative 14,000, and asset purchases of negative 3,000 comes from there. Do you notice that we do not include the sale of assets? We did not include the sale of the land. We just include the purchases of long-term assets. 3,000. So Fred has a free cash flow of negative $17,000. So it's sort of like fun money. He doesn't have any. It's worse than not having any. He's really in the hole here when it comes to having fun. So if Fred did have some free cash flow, what could he do with it? Well, to answer that, we've got our 4 uses of cash. And this just summarizes what a business can do with money that they have. So one thing that Fred could do if he had free cash flow, and he does not, coming down here, there's his free cash flow, negative 17,000. But if he did have free cash flow, he could spend it on improving operations. He could advertise more. He could hire more workers. He could expand his business. He could add a new product line. The opportunities here are infinite. Number 2, if Fred had free cash flow, he could purchase more assets, but he doesn't have any free cash flow. He could pay down some more debt if he had free cash flow. And finally, owner withdraws, he could pay more dividends if he had free cash flow. So this free cash flow is a very important indicator. And when I'm looking at businesses and analyzing them and checking into them for investment, if they have a negative free cash flow, in a nutshell, I am just not interested in the company at all. And you'd be surprised, there are a lot of companies without a positive free cash flow. So I hope this lesson helped you out, helped you understand free cash flow. And if it did, hit that subscribe button and like button. And let me know if you like the video so I'll make more. And until next time, over and out.